Welcome back, global investors. Today, we're diving into a true titan of the Japanese leisure industry, Oriental Land, ticker symbol 4684. Look, we all know the magic of Cinderella Castle and Mount Prometheus, but today, we're pulling back the curtain on the staggering financial engine that makes all that magic happen. We're going to break down their latest financial data to see exactly why long-term investors worldwide are practically glued to this stock right now. Let's get into it.
Okay, let's dive right into this number, 704.5 billion yen. That is their record-breaking revenue for the fiscal year ending March 2026. It's a 3.7% increase year over year. Just let that sink in for a second. In an era where everyone's whispering about inflation and economic uncertainty, how many companies are seriously delivering this kind of top-line growth? It's absolutely massive. Now, what's genuinely fascinating is how they hit that record revenue. If you look closely here, park attendance was actually basically flat. You heard that right, no massive surge in visitors, yet revenue skyrocketed. So this isn't just some simple equation of packing more people in to make more money. Not at all. And honestly, this brilliant little disconnect is exactly what sets the stage for Oriental Land's incredibly powerful equity story. So here's our roadmap for today. We'll be walking through their unique business model, their overwhelming pricing power, strategic investments for growth, attractive shareholder returns, and finally, why they are the ultimate experiential asset. Let's keep moving. All right, starting with Section 1, their unique business model. To really understand Oriental Land, you've kind of got to shift your mindset a bit. Don't just think of them as a theme park operator. Think of them as managers of a highly lucrative experiential asset. They operate the only independently capitalized Disney resort in the entire world. Because they aren't directly owned by Disney, they have the agility to make management decisions perfectly tailored to the Japanese market, and they can funnel profits directly back to their own shareholders. This combo of independent capital and a world-class IP, it creates an unmatched economic moat that competitors literally cannot touch. Moving right along to Section 2, their overwhelming pricing power. Okay, remember our mystery from earlier? How exactly did sales grow without a boost in visitors? I want you to really think about that. When inflation hits, you can't just cut costs to drive top-line growth like this. So what's their secret? Well, it all comes down to a dramatic shift in guest behavior. So the crucial point is this number right here, 18,403 yen. That is their latest record-breaking revenue per guest. Let that put things into perspective. People are enthusiastically, voluntarily spending this amount out of pocket for just one day of experiences. And why are they spending so much? It boils down to three brilliantly executed strategies. First, they rolled out variable ticket pricing, which naturally shifted focus toward higher value ticket tiers. Second, the adoption of Disney Premier Access, which is basically their paid line skipping service, is just soaring. Guests are literally paying a premium to buy back their time. And third, merchandise and food sales are through the roof, heavily driven by the Duffy franchise and the massive success of the new Fantasy Springs area. It turns out, even with inflation squeezing wallets, people will gladly open their checkbooks for a one-of-a-kind experience. That is the definition of inflation-proof pricing power. Now, let's transition to Section 3, strategic investments for growth. Let's talk capital efficiency. They're currently sitting at an 11% ROE, which is solid. But if you look at the forecast for the upcoming fiscal year, you'll notice a temporary dip in profit. Now, if you're an investor, your alarm bells might be ringing, but don't panic. This isn't because demand is dropping. Actually, scratch that. It's the exact opposite. They are intentionally taking a hit now to fund massive hotel renovations, like at the MiraCosta, and crucial IT system upgrades. And this brilliantly illustrates exactly where that money is going. We're seeing increased costs in human resources, heavy maintenance, and IT infrastructure. You shouldn't view these as just expenses. Think of them as building a strategic runway. They are quite literally laying the groundwork so the parks can support future growth and justify even higher pricing down the road. You can't maintain a premium, magical experience without investing heavily in your people and your tech, right? When you look at their timeline, it becomes super clear that these current investments are just a springboard. I mean, check this out. In 2027, we're getting a completely renewed Space Mountain. Then the absolute game changer hits in 2028 with the launch of a Disney cruise operating right out of Japan. That is an entirely new, massive revenue engine out on the water. They've stated loud and clear that their goal is to completely blow past their current ROE targets by 2035. So yeah, this current little dip, it's just them crouching down before a massive leap forward.
All right, Section 4, attractive shareholder returns. Let's see how they reward their investors.
For global capital looking at Japanese stocks, governance and shareholder returns are absolutely make or break. Well, Oriental Land definitely got the memo. To celebrate their 30th anniversary of being listed, they announced a really special perk, a free one-day park passport for all shareholders holding 100 shares or more. It's such a smart, uniquely Oriental Land move. They're literally taking their biggest competitive advantage, their experiential value, and handing it directly back to their investors.
But hey, they certainly haven't forgotten about the institutional investors who want hard cash. They are forecasting an annual dividend of 16 yen for the fiscal year ending March 2027. This represents a continuous increase, which sends a very strong signal. It shows they are hyper-focused on optimizing their capital structure, striking that perfect balance between aggressively reinvesting for growth and consistently returning cash to shareholders.
Okay, we've made it to the final section, the ultimate experiential asset. Let's tie this whole thesis together. Let's move to and see how this builds into one incredibly compelling case. We've got overwhelming pricing power, proven by guests willingly dropping over 18,000 yen a day. We've got a fierce drive to improve ROE through massive expansions like the Disney cruise. And we've got steady, increasing shareholder returns. When you put it all together, it's obvious they aren't just running a theme park. They are a highly sophisticated, financially optimized leisure juggernaut operating on pure capitalist logic.
So, I'll leave you with this question. Are you ready to add Japan's ultimate experiential asset to your portfolio? Of course, you always need to do your own research, but after looking at the mechanics under the hood today, it's pretty clear why smart money around the globe considers this a top-tier long-term hold. Go check out their latest filings for yourself and see if this magic fits your strategy. Thanks for joining me today, and I'll catch you in the next one.